It was a late Friday night, or should I say early Saturday morning in Las Vegas, so you can only imagine our condition. That aside, we stopped at an establishment that had a mechanical bull. While hanging out with the fellas and watching a number of people attempt to ride the bull, the conversation quickly turned to which of us could stay on the bull the longest. Bets were made and challenges were accepted. In all of our bravado, we forgot to account for one major variable: the operator of the mechanical bull. Specifically, we didn't account for him noticing that we were placing bets, and secondly, a bar full of people are far more interested in watching women ride the mechanical bull than men. Let me tell you, one by one, we were all thrown off that bull, and quite aggressively, I might add. As soon as we started on the bull, the operator dramatically adjusted the intensity of the bull ride. This experience has a number of lessons and analogies that absolutely apply to investing in precious metals. Let me explain. The operator of the mechanical bull definitely made it harder for men compared to women, which is kind of like investing in precious metals. The market makers definitely make it harder for us compared to the general stock market. Next, the mechanical bull gyrations are a lot like the market: abrupt starts and stops, ups and downs, round and round, all intended to get you off the bull or out of the market. By design, it is exhausting and intended to wear you down. Hands down, though, the hardest part of that ride was not when the bull rocked up, it was when the bull pointed down and shot you forward. The markets do the exact same thing, which we've seen over the last 3 years in particular. But like the mechanical bull, the longer you can hold on in these markets, the greater your return. Let's continue our conversation from the previous videos about being an optimist versus pessimist as an investor and the importance of reasonable expectations. I'm sure some of you are tired of hearing me say this, but so much of investing money is not about the investment vehicle, but about you, the investor. This is especially true right now as we continue to see people selling their silver as the market continues to shake out the weak hands, which actually is very important and a great signal. While I don't like any situation where someone is forced to liquidate their stack, I am very happy, even excited to see people finally giving up on silver, because that is what capitulation looks like to me. Why is that important? Because right around the corner for capitulation is a market turnaround. Just like how euphoria and overexuberance march the top of the market,
I own them because I like what's hated. And the silver bugs have been so disappointed by silver since the Reddit silver squeeze of 2020 or wherever it is, that there's no speculative premium in silver at all. The adherents to silver hate it. And I love stuff that's hated. I love stuff that's hated where if the narrative changes from hated to neutral, I get a triple. I like the fact that it's dead.
This is why, regardless of what people say, most people buy high and sell low. It's all about how you see things. Some see this as a time to get out of silver because it's never going to do anything, or that it's a hopeless investment. Let's go back to the letters I showed you at the beginning of this video. More than 70% of you saw the negative phrase, 20% of you saw the positive phrase, and only 10% of you saw both. That exact same set of letters gave you two very different phrases and perspective. But what drives what you really read? You, your mind, your perspective shape what you did and did not see. This is not about being a pessimist or optimist, but it's about training your mind and your eyes to see things differently, and that will help you become a better investor. Right now, it's very easy to view silver as a bad investment or underperforming investment compared to gold, and that would be 100% accurate, but not necessarily 100% correct. I'm perfectly fine with silver because silver is doing exactly what I expected it to do: nothing. Let me be crude for a moment. Silver is a lot like a constipated fart. A lot of noise, but no substance. At the same time, you have to be careful because it has these moments when you least expected that there's some explosive movement, if you know what I mean. For more than 50 years, silver has followed the same pattern. It does nothing. It does nothing, and then all of a sudden it goes boom. I absolutely want to give credit to Jeff Clark from goldadvisor.com for coining the phrase boring, boring, boom when it comes to silver.
When that gold bull market is partly through, 30 or 40% through, the narrative spills down into silver. Silver is more volatile. It has a lower unit price, so more people can play. And when silver moves, it's always after gold, to the disgust of the silver bugs. It moves much further and much faster than the gold market.
Take a look at this chart of silver since 1971. While the current cup and handle-like shape gets all the attention, the whole price history of silver is kind of like a series of cup and handle formations, with the periods where the price spikes like crazy. Going back to expectations, I didn't buy silver because I expected significant long-term appreciation like we see in gold. Why would I? Historically speaking, it has never done that for us. As this chart shows, the percentage increase since 1971, and it's not even close. Gold has increased more than 5,000%, while silver's increase is about 1,300%. I have silver for those red circles that you see on the screen. I hold for those insane moments when silver goes boom and loses all sense of gravity. As Maya Angelou taught us, when people show you who they are, believe them. Well, silver has shown you who it is, and you can see what it's done for the last 50 years. So why in the world would you even consider believing something else? You might as well expect your dog to purr and your cat to bark. Just don't get mad at them when they don't. Now let's get to the good, maybe even the great news. I really want you to pay attention to this chart. When we get into a bull market, history shows us that you can expect silver to outperform towards the end. It's not for very long, but it does do that. This chart shows you every bull market since the 70s, and I want you to notice the type of gains. If you take the average of the three real big significant bull markets in the 70s and early 2000s, the average increase is around 600%. Yes, at the end of the 70s, we saw silver increase 1,000%. So could silver go up 1,000% from $22 to around $270? Sure, but would that be a reasonable expectation? Remember how I said in my last video that $100 or $150 silver was reasonable? Look at this slide, and all I did was calculate the price percentage increase for $100, $150, and $270 silver. I share this with you because I want you to see, learn, and understand my thought process. Plus, I don't want you to think I just make up these projections. I did a projection of a 350% increase, which is what we've seen over the last two major bull markets, the 1,000% increase, and then I essentially split the difference. And that's how you got that little 560% increase. I prefer to be conservative, and I tend to go with $100 silver, while $150 would be aspirational. As a disclaimer, no one really knows, and it really will depend on a dozen other variables. But given the information we have at this moment, that's a reasonable range. That could change as we get further into the bull market. Before we get out of here, and now that we know that silver will go boom, let's kind of hone in and get a rough guess of when. Thanks again to Mike Maloney and goldsilver.com for this chart where they measure the amount of time between each of the silver spikes. And you can see the time varies significantly, but on average it's 3 years and 7 months. As a quick aside, I believe the large shaded area contains a typo and it should say 3, not 2 years. According to their chart though, the last spike was March 2020, which means we are in the range, understanding that it could go as long as 6 years. Now, I do believe 6 years is too long for our current conditions, but just yesterday I heard Rick Rule say this, and it's the perfect phrase. He said, "I only have 2 balls and neither are crystal." I just love that, man. I can't promise you that it will go boom this year, but I can warn you that you need to be positioned before the move. I think the powers that be have found a new way to delay the inevitable, so it could be 12 to 24 months away. Don't worry about the timeline because most of you swear you wouldn't sell anyway, so why should it matter? That aside, there is a time to reap and there is a time to sow. And if you have the mental capacity and the emotional resolve to be patient, this is the time to stack and prepare for harvest time. Silver, more than any other investment, sticks to the motto, if you can't handle my lows, you don't deserve my highs. Or as Marilyn Monroe said, if you can't handle me at my worst, then you sure as hell don't deserve me at my best. We've been through the worst of silver with $17 silver. And it may turn out that it may get bad again and we might go down to below $22. Regardless, all we can do as investors is lean on facts and figures and not hype or hopium, as our expectations and outlook will determine whether we see hope is nowhere or hope is now here. Silver rewards those that are faithful and committed to it, though it is infrequent. It does happen, and history provides us with some context of what to expect. Silver doesn't care about your timeline. It's going to do what it has always done.
I think after some period of time, that might not include 2024, that the silver price goes higher too. So I'm long silver. I'm almost certainly 18 months early.
If that is the case, then all you really can do is stack and wait with excitement for what is coming. If you want to learn more about the silver cycle of boring boom, well, I did a video for you a year ago where I really went into great detail about this. I just rewatched the video and I think you should watch it because there are some real gems in there for you. I'll link to it right now, and it's a thumbnail with 300 to 400% returns, and it's titled "Not Another Silver Price Forecast, Instead a Data-Driven Fact." In the comments, are you more or less confident that silver will go boom? Do you think silver will go boom in 2024 or 2025? Or you can simply put an A+ in the comments to let everyone know that you always stack smarter and never stop learning.